Then our ambition has always been to go regional, right? Take the Malaysia story outside. Can we go to markets where they are present and we have a right to play, right to win? I mean, we would obviously want to be a multi-billion-dollar company.
It was announced that you guys are targeting profitability by this year. What's that looking like? Are we still on track?
So I think we were saying on a cash basis, we will be positive by quarter 3.
Okay.
Maybe going into quarter 4, but I think we're pretty much on track there. So we've been making quite a lot of good money being a platform player and an aggregator player. So the merchant business today as a standalone Boost Connect is a profitable company if you take it as a standalone event. And that has been one driver. The consumer lending business, the PayFlex product has been a key driver for us, I think.
I'm here today at the Boost office and I'm joined by its group CEO, Sheyantha. And of course, Boost as a brand had a lot of firsts under its belt. From being the first e-wallet to really bring the e-wallet concept to the mainstream in Malaysia, to being the first homegrown digital bank in Malaysia. Sheyantha, welcome to the show and thank you for joining us.
And thank you, Vincent, for coming to our office. We've had many conversations.
So many
conversations over the years, but I realize you've never been to our office, so that's probably on us. Thank you so much for coming over.
Glad to finally have one in your home turf. And it has been interesting observing your journey in the past 7 years. I remember the earlier conversations were so much more different, right? People were talking about, whether e-wallets are necessary, and now we're talking about digital banks. And in that 7 years, the brand has really evolved, right? From being a pure play e-wallet to launching a lot of different embedded financial services to now a digital banking play. So in this new chapter for the Boost Group, what does success look like for the group?
Oh, we're starting with the big question.
Oh, of course.
So I think there are a couple of components to what success looks like, right, for us. So one is our business ambitions, right? And if you take our business ambitions, I think I've spoken about this before with you and publicly. I think there are two elements to it. One is we have a lot going on in Malaysia. So if you think about us as an end-to-end fintech, we've got everything from a wallet, which, like you mentioned, was our original business. We had a lending business, a micro SME lending business that is now falling to the bank. We have a platform payment gateway business, Boost Connect, right? So one kind of mandate for us is really to take what I call Malaysia to full potential. So we've got a lot of kind of things baking in the oven. How do we really take that to full potential? And I think what I mean by that is, from a success perspective, it would be a large part of our customers, right? Being able to seamlessly adopt all our services across a single platform. And I think we are slowly evolving to that. And basically, we have two sets of customers. One is kind of consumers, and consumers we don't really, I mean, a lot of our consumers are what we would call underserved customers or customers, whether it's B40 or M40, basically at the low end of the socioeconomic pyramid. And of course, businesses is small business. So we solely focus on small business. So it's really those two key segments, right? So that's the Malaysia story. Then our ambition has always been to go regional, right? Take the Malaysia story outside. And one of the natural advantages we have is we have a parent who has footprint in other markets.
Right.
So we've always tried to see, can we go to markets where they are present and we have a right to play, right to win.
Sure.
So we've done a lot of good stuff in Indonesia. So that's another market we would eventually, do a lot more in, maybe look at some kind of banking play, whether it's a license or something else. We can talk more about that. And then we're also doing some experiments in countries like Cambodia. We're doing, looking even at countries like Bangladesh, frankly, where ASEAN has a dominant presence, but again, very early. Of course, every market, a lot of the markets we operate in are markets that have inherent risk as well. So we need to be judicious in how we approach it. So that's another element, right? So one is Malaysia full potential. The second one is how do we take the Malaysia story and make it a real story in a couple of markets as opposed to just... And the final one, I think, is our financial ambition, right? So eventually, I think we would want to take, we would obviously want to be a multi-billion-dollar company. And we would want to also be a company that generates a sizable amount of profit to support that valuation. We don't believe in just valuations based on, hype anymore. I won't get into specific numbers, and then a way to crystallize that valuation.
Okay.
Right. So I think that's broadly kind of the buckets we're looking at.
Okay. So speaking of your parent company, speaking about some of these other markets that they are in and the right to win, what are some synergies with the group that you guys are leaning on? And when you speak about right to win in markets like Indonesia, markets like Cambodia, markets like Bangladesh, what does that look like?
Yeah, I mean, it's interesting. The journey started obviously being a 100% owned company with Axiata. And we found that our journey to grow Boost has been twofold. One is we've had to be agnostic from the parent company, as in we were not tightly coupled.
Right.
So our model, by definition, and the model that grew is we would work with anybody, we would even work with another telco, we would, and it's that model that helped Boost to grow in its first phase. Now that we've grown sizable, I would say in the last 2 years especially, we've been able to get some workable synergies with a lot of the operating companies that Axiata has. So for example, with Celcom Digi, we've been able to launch products where we've been able to use CDR data, to use exclusively CDR data, which is call data records basically, to underwrite customers.
Right.
And give them credit facilities purely based on that.
Okay.
I mean, this is something people were talking about for about 7-8 years, but
right.
nobody really cracked the code. We've been doing it now for about 24 months, and we find the models work better than, looking at somebody's bureau and checking the bureau, for example. So there are a lot of green shoots that we are seeing with the telco. We're doing something similar in Indonesia. And as we think about other markets, we would primarily follow that model, right? So let's say, can we use data first? Number one, to build something, because telcos have a lot of data, and we feel and we have our own data science team. So I think that's the starting point. The second thing, obviously, there's got to be alignment between what that company, even though it's a sister company, wants to do in the market, and can we as a fintech help a telco? We've got to think of it like any other partner. Yeah. Either add incremental revenues, help churn reduction, or just bring a different proposition to the market. So we need to apply that lens, and it's when we apply that lens that kind of we get success. And the third thing is we need to find a way of, the cross-sell of customers never worked. Now things have evolved where everyone is talking about embedding finance products in. So which was not possible, let's say 5 years ago, because a lot of telco customers were not on their own digital platform. So one of the big shifts that has happened in the telco world is now a lot of customers are actually on a telco app, whether it's a merchant that is ordering what you call airtime to resell, that's on an app, or whether it is a customer. A lot of us pay their bills, etc., on the telco app, and we interact with the telco app. So there's a lot more. The telcos have also digitized their interfaces. So that makes it a lot easier for us to embed products in. So that's also a shift that has happened in the last 3 to 4 years. So the previous cross-sell models did not work. We are trying to have a go with kind of an embedded version of what we do, like we do embedded with so many other third-party partners.
And maybe a quick follow-up on the whole conversation about using CDR as a means of credit evaluation, right? So as a result of having this data point, what were some outcomes? Were the outcomes that you were able to give financing to customers you weren't able to finance, or were the MPLs improved? What were some outcomes from using this data?
Yes to the first answer. There were customers who we had no other data points on, but purely on CDR data, we were able to lend to them. Okay. That was the first bucket. There were also customers who we were able to score. Maybe we had their transaction data with us, or they had some bureau record. But using the overlay of CDR data, we were able to get better insights and give them enhanced credit limits. Right. So one is customers we were able to score and give a starting credit limit. Some customers we were able to enhance the credit limit. In performance of the data, again, getting a bit technical, the Gini coefficient was higher than the Gini coefficient on a model we run on bureau data. So I think it was something, I can't remember the number offhand, I think it was closer to about 0.75 or something on CDR data. Having said that, again, getting a bit more technical, the postpaid data tends to be more predictive than the prepaid data. Right. So the postpaid data, because customers in a postpaid, if you're a postpaid customer, it's effectively credit. Yeah. So you're getting a line and you pay. So you're able to separate a good payer from a bad payer. Right. Whereas prepaid, you've got to do a little bit more incisive analysis. Yeah.
Interesting. I think that's one of the thesis that's been out there for a while, and it's good to see it in action. So now, shifting gear a little bit, Boost Bank has been around for a year now. Now that it's hit its 1 year anniversary, and I remember this is a conversation that we've always had, right?
Almost getting there.
Almost getting there. Almost getting there. By the time the recording comes out, it'll be a year.
Okay.
So I guess the thing that we always spoke about before even you guys applied for the license is that you wanted to rehouse a lot of the financial services under the bank. Now that the bank is almost a year, how have you rejigged Boost Holdings' fintech business?
Yeah, so if I take our businesses in Malaysia, I think we broadly had three, right? So before the bank came, we had the wallet company, we had the lending company, and we had the platform payment gateway service. Now, the platform payment gateway service was always kind of like separate outside, but of course there's synergy because we can use the bank for acquiring, we can use the bank for as a settlement, the settlement layer, etc. Right? And of course, the bank can lend to a lot of the customers in the payment gateway, especially the small merchants who are there. So I think that there's a lot of natural synergy there. But that was so when we looked at the Boost Credit business, which was basically micro SME lending. That transition has almost happened. So that has basically folded in to the bank. So basically what we mean folded in people, technology, and loan book. I think the last few legs of the loan book are just getting transferred in. So that business was basically absorbed by the bank. So I think that was according to plan. Then we had a lot of our team sitting in the original wallet business. So the wallet business, I mean, for various reasons, technical reasons, we haven't folded that in. But we kind of worked. We made sure that it is working very closely with the bank. So what do we do there? We actually transferred a lot of our teams from the wallet into the bank first. So by doing that, we were able to also take a very important aspect, the fintech learnings that we had developed in Boost into the bank. So the bank has people obviously who've come from banking backgrounds, but we have a lot of people who've come from the original Boost kind of DNA wallet, and that's creating. We're trying to create that hybrid DNA in the bank. So that was one that happened. So the wallet we operate with quite a light team right now today. The second thing we did is, which was a journey for us, and I think that's the first part of a larger journey. We were able to embed most of the banking services into the wallet app. So if you want to open a bank account, you don't need to do a re-KYC. You can use a wallet KYC just as a top-up step. Then you can do everything from transfer funds, open jars, whatever in the wallet app. You don't need to necessarily go into the banking app to do that. And eventually we want to even do security authentication, make the wallet maybe if you want to choose the Boost wallet app to be your app for banking, we want to give that choice.
To do so.
We can't do it today. We have just a few more steps to go. So maybe you device bind the wallet, and that becomes your. So there are a few regulatory things we need to get over. But I think, and that's pure embedded banking. Now, the ideal state is imagine doing that with a complete third-party app, right? And that's, I think, the potential of taking embedded banking to its fullest. So that's another thing we've done with the wallet. And then, because we did that, 80% of our customers who are deposit customers in the bank today were customers that came from the wallet. And that's an example where embedding worked as opposed to had we tried to cross-sell. So, for example, if you put a banner ad on the wallet and said, open a bank account, I'm sure the conversion would have been much lower. So I think that was another component. And so it works quite closely, and it's kind of like a catchment channel for the bank. Right? So that's broadly Malaysia, how we fold it together. And I mean, we have a tagline in Boost called One Team, One Dream. Right? So we kind of, while we have different legal entities, primarily because of licensing, because different legal entities have regulatory, so it's probably a legacy, but we kind of run as one team. So, I mean, you're here in our office today. I mean, most of the bank teams sit here, but there are other teams that sit here as well. People can walk in, walk out. Obviously, we have certain areas cordoned off for the bank, like customer service area, treasury, with limited access. But other than that, everybody kind of gets together when we have embedded what we have an embedded team between the bank and kind of they meet every week, they brainstorm every week. So culturally also, while we kind of from a product perspective put things together, I think culturally we were very clear that we wanted to make the people work together as one team.
Okay.
Not that it's perfect. Every company has its journey along that. I think, but it's one of the things we've done quite well. I would say, if I look at how the teams interact, if I look at how fast we've been able to take some of these complex embedded products to the market, if I look at how we've been able to engage the regulator jointly, so I think all those things helped us.
I think the benefits of the cross-pollination of the different teams are very, very apparent. Just going back to the way that you guys are organizing the business. So it's very clear that Boost Connect will be its own unit while still having synergies with the bank. Of course, the Boost Credit, which was Aspirasi, which you used to run, will now be folded into the bank. So for Boost eWallet, will it still be sort of a standalone business where the whole thesis is to be sort of a light version of a bank that then becomes a pipeline to the bank, or what is
I think it would be. I think it would be one of the principal customer interfaces for the bank.
Okay.
Because we have a large number of customers there, and we didn't want to necessarily recreate another experience for those customers. I think so. That's one. I mean, whether we fold it in or not, there are some regulatory considerations there. And some considerations because we are not the only shareholder in the bank. There are some others. So there are things to work through. Unlikely we will do it in the foundation phase because of the complications involved, but it's something we're open to.
Right.
But whether we, in the back end, whether we fold it in or not, from the perspective of a customer, we want to give them a seamless experience. We don't want them to feel like you're dealing with two different units.
Yeah.
That's a no-go at Boost. We just don't allow that.
It's not a good experience.
Right. So that's important to us. So I think how we structure it in the back end, because of a few complications, we may not touch it until the foundation phase is over. But it's always an option. But yeah, and the other thing, I guess, with our wallet business, which is why we completely moved into other areas, and our success has been built in lending as well. Even though we were a trailblazer in the wallet days, was because we also didn't have, I mean, like some of the other wallet participants, we didn't have an anchor use case, right, in the wallet. So we had to figure out how we were going to grow when we didn't have a natural anchor use case. If we take some of the other ones, they had that advantage. So staying as a pure wallet would be an exercise that would require a lot of investment, probably not very much ROI, and we had to reinvent our business model. So that's kind of why we went down this journey.
Yeah, makes a lot of sense. So what does the product roadmap look like in the next 5 years? What kind of services and product rollout are you going to...
Well, 5 years. The next 12 months itself gives me a bit of a headache. I haven't thought through for 5 years. So let me take it in kind of buckets, right? So if you think about what we do in the lending space, and I'll talk about this across markets, including Indonesia, I think we started off with micro SME loans, where we have now a fairly mature product, where we understand how to underwrite that space quite well, not perfectly, but quite well. I would say better than a lot of people in the market. And what we would do there is continue to embed a lot of our micro SME loans are standalone, simply because the customers that we work and the ecosystems we work with are not ready to embed, unlike the consumer side. All right. So, for example, if we work with distributors, wholesalers, etc., they don't have, their tech layers are not so advanced. So we are unable to embed them directly, whether it's Malaysia or Indonesia. So I think that's one journey. Then we're looking at slightly higher ticket size loans as well. So while we've focused exclusively in the I'll take Malaysia, sub 1 million ringgit mark, we are doing a few loans now that are probably in the 1 to 20. Right. So really more in the bank. Just to diversify the portfolio. More importantly, we want to have a fair amount of our portfolio secured. So we are moving into, I mean, the traditional thesis was fintechs cannot do secured lending. I mean, it's not in their domain. Right. But when we look at it from a portfolio perspective, if you have let's say 2 billion ringgit loan book, and if that is completely unsecured, then you are exposed to economic cycles, and you are exposed. So in a benign environment, a 2 billion loan book could work well. So in an economic downturn, a 2 billion unsecured book could probably lead to a huge capital call for your company. So one thing is we are now getting into the secured space as well. So in Indonesia, I'll take Indonesia as an example. So 50% of the loan bookings we've done in the first quarter have been secured loans.
Right.
So we've diversified that space as well. In terms of the product mix also, I think we're doing a lot more. So we've kind of done different variations of loans. So I mean, we have installment, supply chain, invoice financing, all the basic ones, but we are doing slightly different variations. So we are doing low interest, high capital. We are doing a few zero coupon kind of ones for certainly. So if you think about it, we are also trying to move our portfolio a little bit more into structuring the loans to meet the client's cash flow requirements, which is quite important. We've learned in this business, you need to actually structure your loan products to meet your client's cash flow requirements. As opposed to having a standard template product and say, hey, you kind of fit into that, which is what a lot of people do. So that's kind of in the loan business. I think if you take our merchant business, which is something I'm quite excited about, we are launching, I think some of the other leaders in Boost have spoken about this. We're launching in partnership with a lot of even government agencies in Malaysia, a micro SME platform that at its core offers the basic services that Boost as a whole offers. So it would be your payment gateway, your sound boxes, your payment, so the whole payment acceptance, banking products from your cards to your bank accounts to lending, right? But also a whole host of tools, like a toolbox to help small businesses digitize. So one example is a lot of people still write down stuff and give physical receipts, etc. So the platform we're launching, for example, has a tool to OCR capture those and immediately put that into your statement.
Okay.
So you can get a consolidated statement, whether it's from
sure a lot of
Bank
small
X.
businesses
Yeah, a
would
lot
love
of
that
small
function.
businesses. Obviously, invoicing is one that we're putting in. So we are working on kind of coming up with a platform that can do more than just provide financing or payment acceptance, which is kind of our two main products for small businesses. So we want to expand that. And we've been pilot testing it, and we feel that there is good acceptance for that. So that's also something that's we're quite excited about from on the product side. And we will start in Malaysia. We probably look at other markets as well in Indonesia. So I think that's one. Then I mean, I don't want to talk about. I can't disclose too much because my teams will say, hey, you're giving all like a pretty secrets away before we launch. But we want to enter a few other segments. Let me put it that way, in the consumer space, right? So we have had consumer lending now, which has been doing quite well under a brand name called PayFlex.
Right.
So basically, it's a cash loan or a pay later product. But basically, I mean, it's a consumer loan. But I would say what we do is we're very careful on kind of, because we know the pain points that the regulators have. So we are very careful with our affordability assessments, etc. So we make sure that if we give a loan, a consumer loan, we don't over-leverage the customer.
Of course.
And the customer has the ability to pay, which is kind of one of the big concerns about regulators, right?
To some degree.
Yeah. So around that, we will extend with more consumer. I'm trying to give you an answer without really kind of disclosing too much, but we will broaden that, and one or two quite exciting spaces here in Malaysia that we'll be entering probably in the next 6 months. I think that's also going to be quite interesting for us. And we are starting, like I said, we started to do a few experiments in other markets. I mean, Cambodia is one. We may start something in one or two other markets as well. Most of that will be kind of focused on telco lending use cases in the model I spoke to you about. But that's more kind of in the frontier experimentation kind of zone.
So it sounds like to me, the core remains the same.
Yeah.
But we're going to see some variety.
Yeah.
And on the other hand, you are also exploring some new segments, which we will find out about in about 6 months.
We've also set up a future lab kind of thing where because one of the things that I feel we haven't done in the last, because we've been so busy with so many things on our plate. Yeah. Launching a bank, getting about the profitability. So I think one thing that Boost was good at in the past, I mean, you spoke about, obviously, we popularized Scan and Pay, but we also popularized digital lending. When we started with Aspirasi, nobody else was doing it. So that innovation frontier, we want to kind of see whether we can, what's our next big throw out to the market. So we are also, I don't have a product right now, but we have a process in place that we really want to invest in, and also figure out, okay, if you have another frontier product, what's that going to be?
Shifting gears a bit, and we spoke a little bit about numbers, we spoke a little bit about sustainability, and I think in the previous annual report press conference by the group, it was announced that you guys are targeting profitability by this year. What's that looking like? Are we still on track?
I think we're on track broadly. We are talking about profitability excluding the bank, because the bank obviously
Of course, because that's just a year.
So outside the bank, we are on track. I think we had a few in quarter one. We had a few one-offs that hit our numbers. But if I take those out, we are continuing on the trajectory we had in quarter four. So I think we were saying on a cash basis, we will be positive by quarter three.
Okay.
Maybe going to quarter four, but I think we're pretty much on track there.
So I guess a follow-up question for me is that, because we've observed a lot of similar business models around the region, right? And this vertical is notoriously difficult to be profitable. I think we've only seen one or two players from this region that has hit profitability. So for you to be able to hit profitability this year, what do you think are the main lines of business that's contributing to the profitability of the group?
So on again, if you take outside the bank, right?
Outside the bank.
I mean, one of it has been the merchant business. We've been making quite a lot of good money being a platform player and an aggregator player. So the merchant business today as a standalone, Boost Connect is a profitable company if you take it as a standalone even. And that has been one driver. The consumer lending business, the PayFlex product has been a key driver for us. I think if you take a lot of fintech companies that have been in the payment space, or traditionally just the wallet space, a lot of them the ones that have made it have been those that have made it by cross-selling financial services. So broadly, two things, either is lending or some investment-based products. We're not big on the investment side, but so the consumer lending has been a big driver for us in the last 12 to 18 months of getting there. And then, of course, we've rebased some of our costs in the process as well. So, for example, our cash-in costs, a lot of that stuff, a lot of the wallets have found ways to bring that down. That was traditionally a huge cost for us. We are having to spend less and less on customer acquisition. Now we can, across our businesses, where we can now think about how we deepen the customer relationship as opposed to invest in new customer relationships. So all of that in a nutshell. But you're right, it's not a easy business.
No, for sure.
It's not an easy business, and part of the reason we've had to reinvent our business model and look at other lines of businesses also to see how we can get there in a sustainable manner. I think the key is sustainable. A lot of people, and not just fintech companies, you've seen even tech companies, they have a quarter of profit and then they go back into the red, and then so that doesn't help, right? So our focus has always been, how do we make it work on a sustainable basis? And also, we don't have kind of an exposure where it's driven by one or two products, and if those products suddenly don't work out, then kind of the entire journey is kind of goes off ramp. So that's kind of been our thinking.
It's certainly fascinating to see how the group and the businesses have evolved, and the kind of new strategies that you guys have put in place as well. So I guess, speaking of your next frontier, which you spoke a lot about expansion to different markets. Now, of course, those markets, you are not as strong as you would be in Malaysia, and I believe partnerships would, of course, be a key factor for you to find success in those markets, right? So what kind of partnerships are you looking for in Indonesia, in Cambodia, and Bangladesh, and what makes Boost a good partner for the partners who are potentially thinking of working with you in these markets?
Okay. So
basically, what do you bring to the table?
One is if we get into a market, and it's a question that I get asked a lot from local. One is, are we there for the long haul? I think if we are, so which is why we haven't really gone into multiple markets on day one. We want to be very sure of what we do. Do we have a right to play? Do we have a right to win in those markets, and so forth? So if we do get into a market, we would be committed. I think that's the first thing a partner is looking for. Are you committed to this journey with them, right? The second thing is we kind of we work a partnership in a way where we have skin in the game, right? So it's we are putting either our money, our reputation, something at stake. So the partner knows that it's a win-win or a lose-lose situation, right? So the incentives are aligned.
Okay.
So that incentive alignment is pretty important, right? I think, and then fundamentally, I mean, we've done partnerships with a lot of people, right? And I think you need to invest in that courtship period to make sure that you are aligned in terms of principles and what you want to do. A lot of people rush into partnerships thinking, oh, this looks great on paper. I've got the technology, you've got the customers, you know how to get to market. So yeah, it's like doing a jigsaw puzzle, but that's not in my experience, that's not what it takes.
So many
to make a partnership work. That's kind of a PowerPoint presentation to tell people, oh, we got the pieces. Is really, is there a meeting of mind between the partners? I can take one example. I mean, openly I've said this, I mean, RHB and us, right? A lot of people said, hey, how can you guys work with a traditional bank?
No, I think that was the first,
a lot of people
thought about,
I mean, I can tell you it's, I mean, obviously we've had our differences on a few things, but it's been a great partnership from my perspective. Their DNA is very different to our DNA. They run more like a bank. The way they take decisions, the way we take decisions is completely different. But because we had open lines of communication and because we had invested so much time in the partnership and we have a model that works from my perspective, that's been one of our success stories. I mean, there have been banks in the region that have failed because of shareholder misalignment and because consortiums blew up and nothing to do with the model or so we haven't had that because I think so that's one. If you're a partner, I mean, and if we get into a partnership, I think we're serious about it and we make sure that we have an alignment. I think that's super important. The other thing is, I think, I mean, in terms of, we are quite clear in terms of what we can bring to the table, right? So we have a model in terms of, so for example, if we have a telco in that country and we have a third part who wants to be part of the ecosystem, let's say they have a payment platform. We would be very clear we have a model to be able to get those telco customers through our sister company and put them onto your platform. And we have the data, the technology, and the scoring ability and the products to make that work. So we can make, for example, that tri-party arrangement work. So that way we bring an immediate value to the partner. And we also have customers in market that we can immediately bring. So that's just one example of how we would pitch it. And then I think the other big factor is that, I mean, we've gone on this concept. You'll hear Karthik talk a lot about it in Boost. Basically, zero code integrations, right? So we've been focusing. We find that also to be very heavy. So we have a partnership and it takes forever to get the product out. So we have worked on a model where we promise zero code, to be honest. It's not 100% zero code. But we try and aspire to zero code integrations now, and it helps that most partners have a lot of their tech platforms are kind of on APIs.
Yeah.
So that's also something that helps us. So we work where if we are able to agree on principles of partnership, we are able to do a POC quite quickly with partners now. So some of the stuff we're doing in Cambodia, we've launched it very quickly. And we're able to do that because we better understand how to plug and play into partners on the ground. So I think that's kind of a long answer to what you asked, but hopefully it makes sense.
It's a complete answer, right? I guess what you're trying to say is culture, speed to market, and culture, speed to market, and also the ability to integrate mindset, all this kind of things.
Mindset is quite important.
Commitment.
Commitment is commitment is a key point. Yeah, you're right.
Yeah. So the other thing that I wanted to ask as well, and this was also in the latest annual report, and it stated in the annual report that you guys are looking to bring in new investors for the Boost Group in 2025. What are you looking for in these new investors beyond funding, of course, and what makes Boost an appealing investment story for this group of investors?
I mean, we were 100% owned by Axiata. Then I think in a couple of years ago, we started opening up our cap table. I think that was also part of a journey where the majority shareholder, the only shareholder at that time, wanted to see whether they could get outside validation for what they have helped build. So get other people to come and write checks behind it. And then also when you have a diversified cap table, that gives you're on a better platform to go public or to do some monetization event if you choose to do so. And I think Azir has publicly said that that's the plan they have for a lot of companies they've invested in, including Boost. So I think that was the whole thesis of getting outside people in. Now, what do we look for, right, in outside people? You're right. I mean, it's not just about the money because, we've been funded quite heavily by Axiata in the past. But we try and see whether there is some. So mostly, if you look at the people who've come into our cap table and even the investor that we're hoping to close with soon is strategic, what we call broadly strategic and not financial investors. Not that we are averse to talking to financial investors. We feel that strategics, obviously, if you make it work, adds value to both parties, right? So typically, it could be a bunch of things. For us, it's maybe a new segment of customers that they have that we don't have access to, and how do we get access to those set of customers? So let's say they could perhaps have privileged access to customers because they have a trust factor. So in our business, trust is quite important,
it's
right?
paramount,
Yeah, it's primal. Like when you're selling financial services products.
Yeah.
So I think that's one ambit, right? Do they have a set of customers? The second is from their perspective, perhaps we have products, technology that could help enhance the trust and relationships they have with those customers, B, give them some revenue upside. So there will be some kind of commercial share. So usually that's the basic construct. It's not something kind of unknown. I mean, that's the basic construct. I think the challenge with all of these things is, again, how do we make that really come to life, right? So a lot of synergies tend to be paper synergies and don't really materialize, right? So when we do, one of the things we've learned, I mean, I won't get too into the specifics of it, but when we try and bring in investors now, in the deal structure itself, we try and have some kind of alignment where they actually are incentivized to make the synergies work. And we are incentivized. So beyond just the cash investment, we have some kind of overlay on the structure to make sure that it's a win-win for both if the synergies actually work. So what we do now is we try and embed some of that into the deal structures itself. So I think that's something that would be kind of different. And really, I mean, that's what we're looking for, right? So let's say we have a plan to get to wherever in 2028. If this investor comes in, or whoever this partner comes in, or any partner for that matter comes in, can we achieve that faster? Right? And can we be much bigger in 2027 than we thought we could be in 2028 or whatever, right? So can we get to where we want to get to faster? And would we look a lot better in terms of the end state, right? And then is there an incentive for both partners to get there? So that's broadly how we think about it. That's broadly how we think about it. And like I said, on paper, there's a lot of people out there who say on paper you can add synergies. I think it's really making it work, right? And so I think
reality is always different.
That's really what we are focused on now.
So the second dimension to my question is, these are the type of investors you want to be working with, but what makes you guys an appealing investment story for them?
I think for us, right, it would be the fact that we have a playbook that works for certain types of ecosystems, right? So we have products, we have technology, we have a brand, we have relationships, etc., that we can bring to the table, right? So we can help, let's say, somebody else achieve their ambitions. So kind of the reverse of what I said, right? We can help them also achieve their ambitions, which they couldn't do on their own. And let's say they have a thesis of what they want to do, and usually it's to do something with digitization or something to do with financial services, and maybe they don't have the expertise, or they just have tried it on their own and haven't gotten traction. They see Boost as a company that has made it in certain ways in these markets. I'm not saying we've gone all the way, but we've crossed the threshold of validation points. and we have proof points. So I think they see us as kind of somebody who can help them fulfill their own ambitions.
And you would, as you say, have privileged access to certain segments of customers.
Correct.
And I guess to wrap up, 3, 5, or 7 years from now, when we sit down for another interview, what are some headlines you wish you'd be able to say in 3, 5, or 7 years from now?
Wow, okay. 7 years, I don't know. You probably may be talking to somebody else here.
Who knows?
I don't know.
Maybe somebody else might be sitting here
I'll
doing
be
the
beyond
interview.
50 by then. I'll be probably on a beach in the Bahamas or something. But
I'll join you there.
let's plan that. I mean, maybe we could be in a different. Hopefully, by that time we could be having this interview not in Malaysia, in a different market. But I would be able to say that. So one is everything I spoke about earlier, right? We've taken the story regional. I mean, I still think we've written the first 3 chapters of the book. There are many more chapters. So from a business model perspective, I think we would have very much entrenched ourselves as a successful digital bank, taken that in some form to the region, right? Hopefully achieved all our ambitions, financial ambitions I spoke to you about. But beyond that, I think, and something that I'm quite focused on now, I think a lot of us have been in this space for a while now, almost 10 years, plus a decade, right? It's really about also, what's kind of the legacy?
Yeah.
What's kind of the legacy? I mean, why have we done all of this, right? So at Boost, one was obviously to make a Malaysian company quite successful and so show that we can do it in the region and take a Malaysian story and make sure that it's a story that can be written not just within the borders of Malaysia, but across the region. I think that was one ambition. The second is, to build a set of leaders, to build a set of fintech leaders that can maybe not just in Boost, if they can, branch out on their own. Because one of the things that we are quite focused on is our own talent development. And I still take pride in the fact that even if you take a lot of people in the industry, you have a lot of ex-Boosties around. Some of them, I can't get into names, but some of them have started their own startups. And they're doing very well. And now some of them have come and partnered Boost, come back to the mothership, and they're partnering
Came a
Boost.
full circle.
And they work, and I'm always happy to do that. So I think that's the other thing that we want to do. We want to build that expertise in this industry and build a generation of fintech leaders, if you like, that can decide to write their own story in Boost, but not necessarily in Boost. I take no greater pride than having somebody go learn stuff here and do their own startup. I mean, there was somebody I hired back in the Aspiras days from Hong Leong Bank, and guy was a credit underwriter.
Right.
And learned kind of the fintech business here with us, and now has gone and done his own startup and is quite successful, and just done a funding round, and is now expanding into Indonesia.
Very nice.
So
then you might be partnering with him there.
Well, actually, we are trying to partner him here. So I mean, it's those kinds of stories. I think beyond kind of everything I said about our regional and our financial ambitions, I think we want to leave a legacy of having done something more. We talk about community, obviously community underserved customers, but also build that base of people who've been able to branch out.
For sure.
And by virtue of that, they become extensions of our story.
Okay. With that, thank you so much for your time, Sheyantha. It's been a real pleasure doing this interview again, and we'll catch up in 3, 5, or 7 years in Bahamas.
Yes. Let's plan for that. All right. Take care.